Good afternoon, investor and corporate. Welcome to SET Digital Roadshow, Year's End 2023 Performance Review. This session will run about 30 minutes. May I now invite COM7 to start the presentation. Thank you.
Okay, thank you, Stock Exchange Thailand, and good afternoon, esteemed investors, analysts, and stakeholders of COM7. My name is Savarot, Investor Relations Manager at COM7. I'm thrilled to have the opportunity to present our company performance over the past year, as well as our plan for the current year. First and foremost, let's delve into what COM7 is all about. First is retail, which is our core business with branches covering almost every area in Thailand. We have banana shops that sells various IT products such as mobile phones, tablets, PCs, and IoT devices. Additionally, we have Studio 7 stores selling Apple products. Second is services. For this model, we can separate into two aspects. First is repair and service for Apple product name iCare or ASP, Apple Service Provider. And second is True Shop name True by COM7, for which we have the right to co-manage the stores. And third is B2B. We focus on commercial and educational organizations. And fourth is online. We also have an online channel to enhance and complete the customer experience. For fifth is distribution. Operated under ADEP, our subsidiary company, we start with the Realme brand before that spin-off. And sixth is hire and purchase. The financial host are the financial to name you fund. And seven is insurance. We start this part in the second half of last year to warranty only IT product, which we specialize in. And lately, we are the mega trend in retail for pet paw to sell pet food and supplies, and Dr. Pharma, and the latest EV car brand Ion. Starting with our performance from last year, total sales for 2023 increased by 11% compared to the previous year. For total sales for 2023 increased by 11% compared to the previous year, rising from 63 billion to around 70 billion. While this growth was slightly lower than our expectation, it still reflects a positive trend. However, our net profit saw a decline, decreasing by 6% from last year, falling from 3 billion to 2.8 billion. This increase in net profit has left our management disappointed with the figure. And to figure out the reasons behind this discrepancy, we spread in the performance into two halves. In the first half, everything was satisfactory. We observed a sales growth of 14% and net profit growth of 12%, largely driven by a gross profit margin of 14.1%. However, in the second half, although sales still grew by 7%, our net profit experienced a significant drop of 22%. This decline was mainly due to a substantial decrease in the gross profit margin, which fell to 12.4%. Thus, it is evident that our problems were concentrated in the second half of the year. So, magnifying into the problem, you will find that in Q4, the gross profit dramatically dropped to 11.6%. Despite a 6% increase in sales, this significant drop in the gross profit margin led to a 27% decline in net profit. Then, what happened in the second half last year? There are several factors contribute to our performance. Let's delve into each issue, starting with the sales amount. First of all, let's see our product mix comparing year 22 and year 23. For year 22, smartphone portion is the biggest, with 59%, followed with accessory 16%, and tablet 13%, IT product with 10%, and other with 2%. So for the year 2023, smartphones still be the biggest portion at 60%, accessory is 16%, tablet 14%, and IT product a bit drop from 10% to 8%, and others then remain at 2%. And for the sales growth by category, you will see that all categories increased. Smartphone increased 12%, accessory increased 13%, and tablet increased 19%, except for one category that is IT products. But this decline is acceptable, considering the peak demand from Bitcoin mining 2 years ago, which has since declined. So we believe this situation will improve this year. And returning to smartphones, here is the Thailand smartphone market data from IDC Research, comparing shipments in year 22 and year 23. In year 22, shipments were 16.5 million units, while in year 23, shipments were 14.4 million units, representing a decrease of around 13%. However, despite this decline, COM7's sales unit increased by 12%. So it indicating that we remain strong in this market. And then moving on to the next issue, that is gross profit. In the first quarter of last year, both we and our suppliers noticed slow demand and agreed to implement promotion to maintain sales momentum. However, this year we decided to decline that promotion, and you will see a better figure in this quarter. Next is branch closure. Last year marked a significant renovation project for our company, with most projects start in Q2 and reopening in Q3 and Q4. For this year, the renovation plan will be less expensive than last year, and we will carefully control and monitoring it to ensure it won't affect our performance. Next is financial costs. Our costs from this aspect exceeded 100 million, primarily due to short-term loan from inventory. To address this issue, we begin with internal control measures. The inventory amount was around 9 billion with a turnover of 53 days last year. We have set the KPI to reduce these turnover days by 10 to 15%, from 53 days to 45 days, and have started utilizing data analytics to assist in achieving this goal. For the issue addressed in the right-hand side, I will describe and show you what the problem is and how we could improve them. Start with standalone. We seriously started standalone concept in year 22, and by the end of last year, we had established 65 stores with various models. This was because we were searching for the perfect model, and finally we found it, marking the key success for the standalone approach. Then, well, to compare the payback period between standalone stores and those within department stores is quite different. Let me explain. For store in the malls, sales growth with 10% within 3 months. However, for a standalone store, it requires more time to gain recognition from people in their vicinity. Despite this, their sales growth reached 30% year over year, indicating that it takes more time to reach their peak performance. So if your question is, are we continuing with standalone? Our answer is absolutely. And for ADAP, as I mentioned earlier, we start with the Realme brand, which has already been spun off. So therefore, last year marked our transition period to seek out new brands, and our new additionals are Infinix, Techno, and Benco. And additionally, the latest brand for which we are the sole distributor this year is TCL. And let's see the opportunity for this year. Here is Canalys research showing the monthly smartphone market share in Southeast Asia last year. If you look at the backline, that represents Transsion, the brand owner of Infinix and Tecno, which we are distribute. They start the year with around 5% share of the total market and rose to the top smartphone shipments for the first time in December last year. So we believe this year gonna be the better year for the mid-low segment market. For Bebe phone, which we acquired at the beginning of last year, we admit that it took us too long to clear the pirate products from the previous owner. Therefore, Bebe phone operate at the full capacity in Q4, and this is the main reason why this shop could not generate profit for us last year. However, now we are quite confident that the performance will turn to profit this year. In addition, we have various house brands to add to Bebe phones and banana shops as well. The growth trend for this house brand is quite strong, exceeding that of other brands in Q2. And not only is the sales trend continuing to grow, but gross profit is also increasing. So we believe the house brand is a great strategic move. We expect the house brand to replace other brands and gain more market share. For PetPal, at the end of last year, we have 11 branches and expect to have around 20 branches this year. This expansion plan is tempered by our increased focus on the online platform rather than on expand branches. Next is Dr. Pharma. The bottom line of Dr. Pharma show a loss, but actually their sales per store were impressive and better than average. However, the cost per store was too high, so our plan is to adjust the model, adjust the product mix, and so our team is confident that this year's performance will be better. That's all about what happened in last year, what caused disappointment for both investor and our management. And now we have strategy in place to address these issues and improve our performance for the upcoming year. And furthermore, there are several other investments we have made where sales haven't been as high as desired or our profit haven't been realized yet. I will dive into those. Starting with our expansion plan, this year we will be expanding by 150 branches, including malls, hypermarkets, standalone locations, because our management still see the significant opportunities in this expansion. So we will continue with this strategy. Next is Banana Shore, which operates shop-in-shop setup to sell second-hand phones. The first shop was opened in the fourth quarter last year, and by the end of the year, we had 6 branches. In terms of performance, I could say that we received good feedback from the testing market in the exhibition, and it has great potential for margin growth. Additionally, the capex for installation is not high. Next is YouFund, our affordability program. We started YouFund 2 in 2021, but it was not for the full year, and we have interest income of 88 million. In year 22, the interest income increased to 264 million, and in 23, it reached 274 million. You might notice that the amount for year 22 and year 23 are close because it was our learning and strategic adjustment phase for us. If you notice in the second line, in year 22, our EBIT amount was 192 million, which account for 73% of sales. This is because we reserve doubtful provisions too low. Due to our lack of understanding of our customer base, which affect the performance of year 23 from doubtful provisions and also write-off. Therefore, during year 22, we adjust the higher purchase conditions to make them more suitable and stringent. And in terms of NPL, if you look at the yellow line, you will notice the multi-line graph in the beginning of year 22. However, since we adjust the condition, our NPL has been under control and has been maintained stable at around 3%. For iCar insurance, is our new models which we start in the second half last year. The advantage of this model is that we provide insurance only for the products we specialize in, which are smartphones, laptops, and IoT products, etc. The revenue recognition for insurance will gradually be recognized based on the contract term. So therefore, the more insurance policy we sell, the more recurring income we can generate. And for the COM7 is our subsidiary company operating through by COM7 shops. Previously, we sold 40% of the COM7 shares to Sabai company. As you may heard, we have bought back our 40% shares. Therefore, the COM7 is now held by COM7 100%. Regarding to the COM7's company, it has performed exceptionally well. Its bottom line is almost 200 million. As a result, we can expect to acknowledge 100 profit from the COM7 for this year. And the latest investment we made in is ION, an EV car brand in which we invest 40% through GI, Go Integrated Company. The first showroom was opened in Q4 last year and it generates sales income. We are confident that the bottom line will be positive. Since the opening, we sold almost 2,000 cars. And as for what management expects from this model, it might be too soon to say because we just start and the EV car is not easy market. Well, for all of these, including the expansion plan, Banana Shore, COM7, Hill Fund, iCar Insurance, and ION, they are positive factors and our team ready to carry out this initiative. And on the flip side, for the negative factors, we know how to close the gap and already have a plan to improve them. So for the year 2024, management expects a sales growth target of a 10% increase. All the challenges we face and the plans we have put in place, some initiatives may require more time to prove their effectiveness. Well, that's all for today. Thank you for your time and participation. If you have any further questions, please feel free to send an email to ir@com7.com. I'm happy to address any query you may have. Once again, thank you.
This session has come to the end. Thank you very much, investor and corporates, for joining the conference. If you do need further details, please feel free to drop us an email. Thank you.